Obviously, Nigeria really needs that foreign exchange inflow, and we do hope that all these efforts and policy changes and adjustments will bring that positive change that we need. We had some good news yesterday, which was the total capital importation into the country for the first quarter. Well, some people might decide to report the drop that was year on year for first quarter of 2023 compared to first quarter of 2022, which was down from $1.13 million to it was $1.57 million, and then it was $1.3 million, indicating a 28% drop. But we just look at some other good news. Quarter to quarter, I mean, look very good. Well, comparing the preceding quarter, capital importation rose by 6.78% from $1.06 million in quarter 4 of 2022. And the largest capital importation during the period was received from the portfolio investment, which accounted for almost 60%, 57.32%. That's about $649 million of total capital importation into the country in the first quarter of this year. And this was followed by other investment, obviously 38.31, and foreign direct investments as the FDI, which we've been shouting about, yes, 4.20. So, I mean, it looked interesting and gave a bit of hope. And it seems that it came, you know, with the election, in spite of the election, and then the new administration, foreign investors in this case, seem to be building more confidence in the country as a destination for their monies and investments. But let's delve into this and a whole lot more with Dumebi Oluwole. She's a senior analyst with Financial Derivatives Company. Dumebi, good morning.
Good morning.
So, I mean, for a change, having this, I think yesterday gave us a little bit of breath of air, even though we've been seeing signs of this, especially when the president talked about unification, the hope of interest rate. Of course, we're still waiting for that, you know, but we've seen investors locally react positively to this. But I mean, I didn't know that it will start, because this is for the first quarter, that's January, February, March. Election was in February, March. So that means even before the results of the election, investors had already started building confidence, you know, in the country.
Well, I mean, looking at the trend of investment inflows into the country just for the first half of the year, we can somewhat say that, you know, we're seeing some level of confidence build back into the Nigerian economy. Reasons best known to the investors, but a few things, you know, we've seen happen that would have triggered this increase in terms of foreign investments. But what we like to look at is the mix of foreign investment that's coming into the country and what we can really do with it. Remember, during the election period and even almost through the first quarter of the year, the NGX actually has done really well, coming from Q4 into Q1 2023. And when we look at the inflows of foreign investments that have come into the country, the top is still foreign portfolio investments. And foreign portfolio investors have flocked a lot into the stock market. So when we really look at how much inflows are coming into the country that the economy would really benefit from in terms of the multiplier effects and hard cash that the government can use to produce or provide rather the infrastructure that we need to then uplift people and then, you know, improve productivity and then, you know, lead to economic growth or even capital formation, then that's where we now start looking at the other forms of inflows that would have been much more beneficial. And the reason why I say this is because FPIs, like we already know, is hot money, right? Quick money, quick to come in,
out.
Yes, quick.
Maybe even as we speak, it's already out.
So yeah, but that's how it really works. And for foreign portfolio investments are usually in equities, bonds, you know, things that have short term, that lost only for a short term, and they're just easy to quickly cash their money, you know, back out of the economy. And we know the issues that foreign investors have actually had over time. And the issue has been that it's easy to bring their money into Nigeria, but it has been difficult for them to get their money out get their money out. So that's why we've been having a lot of forex backlogs, and that's why we've had issues with the foreign exchange, market and everything. But right now, with the latest reforms, we will definitely see more news, like in terms of an uptick in investments into the country, particularly FPIs. And we've seen this happen already. Between May and April, we saw an increase of over 100% of foreign portfolio investment into the stock market and things like that.
I think the stock market grew quarter on quarter,
yes,
more than 4,000%. That's mind blowing.
Yes,
but you just doused that excitement by saying, "Oh, remember, this is hot money."
Yes,
it might already be out even as we speak. But I think the equities is still looking really good.
Yes, it is. And one of the things that we like to point policymakers to is the risk of this quickly turning into an asset bubble. Right now, this happened in Asia. In the 1990s, right, when that now became the 1997 Asia financial crisis. What happened was that they had a huge influx of foreign investment, and most of the investment, this is Southeast Asian countries now, and most of these foreign investments came in the form of foreign portfolio investments. And because of the underlying economic issues that these countries had, particularly Thailand, because of the underlying economic issues that they had, the structure was still bad. Their financial markets were still very much fragmented. It was not strong enough. Financial institutions were weak. They were running current account deficits in the billions. And foreign portfolio investors eventually priced in a lot of these risks and began to pull out their funds. And what really triggered it was the devaluation of their currency.
Wow, sounds very familiar.
Exactly my point. So not saying that that's what's going to happen to Nigeria, but there are potential risks of this happening because we have started treading the path of economic reforms, which is very fantastic, if I must add. But our creditors, investors, and the global economy would still be looking for, number one, a follow-through on these economic reforms that we've started treading on. Number two, shielding people from the short-term impact of these reforms. Number three, sticking to the social contract that the government has with the people. Why? Because we've already started on these reforms. They are painful reforms, and people, the masses, are the ones taking the blows, taking the painful jabs. But the bright spot is that in the short term, yes, you will feel very painful. Yes, it's happening, but in the long term, medium term, we're looking like in the next 2, 3, 5 years, the expectation that the benefits from these reforms will begin to, we'll begin to see the benefit of these reforms taking effect on people. Our GDP per capita should begin to increase. People should start getting more income, things like that. But the caveat there is, if people are receiving these jabs and we're not seeing the money that we're spending come back into the economy in terms of good roads, good lights, good enough fuel, things like that, and things are still getting worse, that social contract is beginning to get breached. And then we could now start having the risk of all of these things happening, where an asset bubble comes in because investors are looking at all of this, credit rating agencies are looking at all of this. How well can the government manage these reforms that they've started putting in place? How well can they begin to uplift people from poverty? How
long in between? We have all been feeling it.
Yes.
The price of petrol spilling over to the price of food and all of that. We've heard promises of palliatives. We haven't seen it yet. It's a month since the subsidy regime has been halted. People would like to know, how much has the government saved within that month? What are you using it for? Because these are some of the ways, as you said, the government can keep to that social contract and continue to win the confidence of the people. So we're getting hit on this side is because of this. We will see this, maybe in the nearest future. Timelines, would really do good. And of course, investors are also following the conversation. It builds their confidence. But how long, from the Asian example that you brought in, how long was the time lag on the average that the people should start expecting to feel some of the relief?
Well, going back to the Asian example, the financial crisis actually lasted for about 2 years. So
no, not in Nigeria.
No,
not in Nigeria, no.
Yeah, so it started late 1997, I think about July 1997, and then, continued up until 1998, and it began to the economy began to uplift around late 1998 into 1999, and most of these countries eventually started. They subscribed to the IMF's reform packages, which is somewhat like the conditions Nigeria is going on with now. We have to remove subsidies, strengthen your financial market, strengthen institutions, government institutions, ensure they are more prudent, so things like that. So essentially, they subscribed to that package, and eventually, things began to, get better for the economy. So we're looking at, so in the short term is more of like 3 months to a year, 2 years. So that's exactly what this looks like. And it depends, like I said, it depends on how quickly the government is able to stick to this social contract, start averting some of the impending economic risks that Nigeria has, that investors are already looking at, and then begin to bring in their confidence. Because really, the Nigerian government is not generating as much revenue as it should to be able to meet up with the needs of the economy. So what we need is foreign money to help meet up with the needs of the economy. And this foreign money is going to definitely come from our creditors, come from foreign investors. And like the concern we're having before we entered into like the hot money bubble and all of that is the mix of capital inflows that Nigeria is getting. We need to start attracting more foreign direct investments. Why? Because those are more long-term.
Not just portfolio
investments, yes. Not just portfolio investments. So we need to start attracting more foreign direct investments. Why? Because these are more long-term. So think of like a company, a multinational company setting up shop in Nigeria. They will, take a lot of they will spend a lot of time to build. They will employ people. There'll be knowledge transfer. People can learn. There'll be employment opportunities that would last long enough. For people to start. And
they can't just up and leave if something.
Exactly.
If they smell something going wrong.
Exactly, and that's where the use of our special economic zones come in. Back to what Asian countries did as far back as 1970s, the 1980s. Countries like Malaysia, Indonesia, and China as well, they really did take advantage of special economic zones. So special economic zones, you have export processing zones there, you have free trade zones, and Nigeria has a lot of all of these special economic zones. And the incentives are pretty much the same like Asian countries used years back to attract foreign investors into their country. What we just need to do is ensure that we attract the right kind of foreign direct investments into the country. That's number one. Number two, we need to ensure that bottlenecks, like I said, these economic and business risks are averted. So things like the port congestion, we need to make sure things like that are averted. One of the major issues that some of these countries, some of these investors that are currently present in Nigeria's special economic zones is forex liquidity. Thankfully, we've desegmented. We have collapsed our multiple exchange rate system, and that has boosted confidence somewhat. We're seeing the naira trade close to the black market and even higher than the black market rate. So the Bank of America is even saying that Nigeria's currency now is undervalued from being overvalued. So and it's still a managed float, actually, not a free floating.
Yeah, I don't think any country would really allow its
their currency to float. Yes, so this is a managed float system. So we'll definitely see some level of interventions still coming in, but the expectation is that forex supply, begins to increase over time, and the naira begins to, trade at the band that the federal government is even looking at, and other, international agencies have already projected between 600 to 650. So eventually we'll see all of the noise in the forex market settle, the dust will eventually settle, and the naira, settles around that band.
Maybe thank you so much for bringing in that Asian example. It's always good to know that we can learn from somewhere.
Yeah.
But we also have inflation. When I saw the projection from FDC, headline inflation at 22.8, just food inflation, I was expecting the whole inflation to hit at 30%, because I know what we saw in June. You know what I'm saying?
Yes.
The subsidy removed and everything just went skyrocketed up there. You know, why does it seem like it's still 20? We're on 22.22 now, going to 22.8 for headline. Only food is hitting 24.8 according to your projection. That's FDC.
Yeah, I mean, we need to look at, there's the impact of base effects here, looking at what inflation was last year in June and what it is today. So that base effect will definitely play into what the headline inflation is going to be, because we're coming from a year ago. The important things to look at when we're looking at the inflation basket itself, or the inflation numbers, are the month-on-month inflation, to see because month-on-month inflation truly reflects what is happening today compared to a month ago. So that tells us how fast prices have increased between May and June. And we see that from the projection, month-on-month inflation is definitely going to increase a lot more. Core inflation, which covers, some of the energy prices and all of that, is also increasing at a very rapid pace. But food inflation, the reason why food inflation is moving that much is because there are a lot of other things that affect food prices, aside the structural problems affecting Nigeria's agricultural space, right, agricultural industry. So we already know things like, for a commodity like tomato, there was a pest disease that that caught almost that caused over 50% of Nigeria's tomato harvest within this period. And there was also the planting season as well that came into play. And then there was now the festive season demand as well that had a minimal impact on tomato prices. So those are the things. So some of these structural issues are still there. Insecurity is still a big deal. We've seen farmers come out again to say they're still having issues planting and even harvesting their crops. So these structural issues are still affecting prices. They haven't stopped. They haven't gone anywhere. Then you now add...
They'll only be
compounded by, the issues like the recent increase in petrol prices that has increased the transportation of food across the country and even within the state. So that as well has increased. So we're seeing multiple impacts on multiple stoking factors on food prices. And for Nigeria's inflation basket, food alone contributes about 51% to our headline inflation. So really, we're seeing more of food items push up our headline inflation. Then you now see the impact of like core and then rural inflation and urban inflation. But basically, the three key indicators or sub-indices rather, to look out for in the inflation numbers is the month-on-month inflation, because that really tells us what's happening today compared to what has happened a month ago. That can truly help us see the impact of the fuel subsidy removal, to see the impact of the electricity tariff changes, to see the real impact of food prices, how that has also evolved within the past month. So those are the things to just look out for.
All right, and needless to say, the commodity prices will be up, I'm sure.
Yes. So we're seeing, like I said, all of the structural issues plus the planting season and the effect of like transportation costs and distribution costs and all of that. Just definitely. And
as you noted, that issue of security affecting farmers and production is still there.
Yes, it's still very much there.
We hope the president will turn his eyes there. We know we have new service chiefs and all of that, but we need for them to get working for us to eat.
Yeah, fingers crossed on that. We just hope that happens, because insecurity has really become a major plague.
Yeah, and it's looking sometimes as if it's a norm. We've come to accept it. Some farmers. I remember I went to Mile 12, to do a bit of report, and I met some people there who are now trading food stuff, and they used to be farmers in the north, but because of the insecurity, they've taken themselves away from the farming area and just waiting. Well, anybody who can afford to go into the farm, I'll just buy it off you and, of course, add some money and sell back here in Lagos. Those are the people who are supposed to be building or producing these crops that we're supposed to consume here, and they're back here just trading because of the insecurity.
Yeah, even larger farm owners are investing in like CCTV cameras for their farms, but it's more difficult to even get workers to come to the farm.
Exactly.
Than even, mounting the CCTV.
Mounting the CCTV. When people mount the CCTV, even those in the urban areas, how much power, how much internet do you have to run some of this infrastructure for you to talk about the rural areas? So a whole lot, a whole lot. The president's plate, not plate, his tray is full.
Yes, you're very right about that.
Yeah. Thank you so much, Nimibi Oluwale, Senior Analyst with Financial Derivatives Company, for your time this morning. Really appreciate it.
Thank you.